Section 1. CODI is a winner, folks. Here's why you need to pay attention. Alright, let's talk turkey. You're here because you want to make money. You want to find winners. You want stocks that work as hard as you do. Well, have I got a name for you? It's Compass Diversified, ticker symbol CODI. This isn't some fly-by-night tech stock with a fancy story and no profits. No sir, this is a real company with real assets making real money. It's a different kind of beast. It's a holding company that acts like a private equity firm, but guess what? You, the individual investor, can get a piece of the action. It's like being invited to an exclusive club without needing a secret handshake. Think about it. Most of the time, the best deals are reserved for the big Wall Street sharks. Let's rewind the clock. Every great company has an origin story, and CODI's is a textbook case of smart thinking. Compass Diversified wasn't born in a flashy Silicon Valley garage. It started back in 1998 with a clear, powerful idea. The founders saw a massive opportunity in the middle market. These are companies that are too big to be small-time but not quite big enough to be household names. That's where CODI stepped in, acting as a partner, not just a predator. Their model was brilliant in its simplicity. They would acquire these solid, cash flow positive businesses and provide them with the resources they needed to thrive. In the early days, they built their portfolio carefully. They bought a company that made baby products, another that produced specialty magnets, and another that manufactured tactical gear. The portfolio was diverse by design. This meant that if one sector was having a tough time, the others could pick up the slack. So, what's the secret sauce? How did CODI go from a clever idea to a market-beating machine? It comes down to three things: discipline, diversification, and a killer management team. First, let's talk discipline. CODI doesn't just buy any company that's for sale. They hunt for leaders in niche markets, companies that are number one or number two in what they do. Look at their portfolio today. We're talking about companies like the Honey Pot Company, a leader in feminine wellness, and Primaloft, which makes high-performance insulation for outdoor gear. This mix means they aren't tied to the fortunes of any single industry. It's a built-in shock absorber for your portfolio, but none of this works without the right people at the helm. And CODI's management team? They're pros. They are masters of capital allocation. A perfect example is their sale of Fox Factory. They bought it, helped it grow into a powerhouse, and then exited for a spectacular return. That's not luck, that's skill. Don't just take my word for it, folks. I'm loud, but I'm not the only one pounding the table for CODI. The sharpest minds on Wall Street are overwhelmingly positive on this name. When you see a chorus of buy ratings from respected firms, you have to sit up and pay attention. These analysts aren't cheerleaders. They're skeptics by nature. Analysts at firms like Jefferies and B. Riley Securities have repeatedly pointed to the strength of CODI's diversified portfolio. They love that the company isn't just a one-trick pony. One of the most common themes you'll read in these analyst reports is the dividend. Wall Street loves a reliable dividend, and CODI's is a rock star. But it's not just about the dividend. The pros also see a massive valuation gap. They argue that the stock is on sale. It's a powerful 1-2 punch. They believe that as CODI continues to execute, that discount will narrow, leading to significant upside. A great dividend while you wait for the market to realize the true value. The smart money, the big institutions, the hedge funds, they don't bet on hope, they bet on strategy. And CODI's game plan is one that the big players can get behind. The core of their attraction is the private equity for the masses model. Institutional investors understand the power of private equity, buying good companies, making them better, and selling them for a profit. The problem is, private equity investments are usually illiquid. CODI solves that problem. It offers private equity-like returns with the liquidity of a public stock. CODI has permanent capital. This means they can be patient owners. They can hold on, provide support, and wait for the business to recover. The management team has a fantastic track record. They buy a company for 8 times its earnings, help it grow, and sell it for 12 or 14 times its earnings. That's a home run. This disciplined recycling of capital is a wealth creation engine, and the big funds love to see that kind of repeatable process. So, why now? The answer is simple. The story is only getting better. The company is firing on all cylinders, and the market is still giving you a chance to get in. There's uncertainty out there. In times like these, you want companies with diverse revenue streams and strong, predictable cash flows. That is CODI in a nutshell. The acquisition pipeline is robust. CODI, with its permanent capital base and strong balance sheet, is in the driver's seat. They can pick up fantastic assets at attractive prices. Let's not forget that dividend. CODI is paying you a handsome yield supported by cash flows from over 10 different businesses. That's safety. That's income. The bottom line is this. CODI offers a rare combination of growth, income, and value. You get exposure to high-quality private companies managed by a team with a stellar track record. Don't be the person who looks back and says, "I wish I'd bought it." The train is leaving the station. Booyah!